Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio value. Of course, the value by the metrics, our buying power, as well as the individual stocks and how they are performing. And of course, Berkshire Hathaway on my watch list. So today we're down about $300 with a 0.5% loss. For that 1 week mark, we're sitting at $223 in the green. That 1 month mark, we are down around $1,000 with a 1.5% loss. That 3 month mark, we are up $6,100 with an 11.5% gain. Year to date, we are up $9,300 with an 18% gain. That 1 year mark, we're up $13,000 with a 28.5% gain. And then all time, we are up $23,860. and 26 cents with a 67% gain all time. Buying power sitting at 197.37. So I did recently just get paid by T. Rowe Price for $125, and Coca-Cola paid me last night for $7. So guys, that dividend income just keeps going up. And to ensure that for next month, since Altria is going to be paying me, I'm going to be using these dividends to buy Apple. So once I get paid by Altria and Realty Income, dividends that you'll see when we go through the individual holdings, I will be adding to the Apple position. So starting off with Realty Income, sitting at 62.04, we have 171 shares, $10,600 worth of market value. Average cost is around $65 per share. Around 18% of the portfolio is in Realty Income. Today we're down $164. Total we're down $500 with a almost a 5% loss here on Realty Income. Then the dividend is going to be paid by Realty Income on October 15th. I get it in the middle of the month on the 15th every single month of $45.06, and I am now being paid for 171 shares. So guys, I love Realty Income. I got a lot of questions about it as of late. And my big thing is the consistency in the income. It pays every single month like I would get from a rental property, and that's really the goal of this position, is just to keep the income consistent. And it does kind of even out my months when it comes to monthly payments, because this pays every month, so I know I get a good about $50 every single month now. So it's a position that I'm happy to hold. And I will buy once it's below my average cost. I'll try to take advantage and get a couple shares here and there. But it is not going to be one of my core positions. Those are going to be Apple, Visa, Coke, Google, and then Berkshire. I'll add Google eventually. Just right now, my big focus is Apple and Visa. So it does its job really well. I will, like I said, I will add a couple shares here and there if it makes sense to, when it's above my average cost, if it's below that number. But as of right now, I'm not adding any at this point. Then we've got Altria at 50.54. 320 shares of this Dividend King, $16,000 of market value. Average cost is $47.27. Around 27.5% of the portfolio is in Altria. Today we're down $121. Total we are up $1,050 with a near 7% return, and a dividend coming in on October 10th of $326.40. Guys, this is by far the biggest dividend payer in the entire portfolio. I'm surprised to still see it in the green, so this is one of those that I would not purchase unless it dropped, which with Altria, it's more likely to drop than go up. So I'm actually kind of surprised it stayed at these levels for as long as it has. I figured it was going to be like a 1 or 2 day spike, and it's been up for almost a week. So as of right now, I wouldn't reinvest these dividends at these prices, but this is one of those that I would happily add to, just because I want to be able to buy a share of Apple and a share of Visa, or 2 shares of Apple and a share of Visa. This is going to be that position that I'm going to add to simply because it can fund a purchase of my core holdings without putting any new money into the position. So this is going to be one of those that I might boost up a little bit here and there, just because I do want that income to go up, but I also have Coca-Cola that pays the same month. So this is one of those that, yeah, I know it doesn't grow as much, the appreciation isn't going to be great over the long term, but the goal of this position is simply to put money into it so it can buy my shares of Apple and Visa. Then with Coca-Cola, it is right around $71 per share. We have 15 shares, $1,062 worth of market value. Average cost is $60.54. 1.8% of the portfolio is in Coca-Cola. Today we're down around 14 bucks. Total we're up $150 with a right around 17% return here. Guys, I want to add more Coca-Cola. I just don't want to add it at these prices. I don't want to buy it at a 16% markup. It's not Apple. It's not Visa. I do love the company. I do think that there is a little bit of a premium when it comes to companies like this. They are a dividend king, so they're in that same ballpark with Pepsi is also one, but Procter & Gamble, J&J. There's a lot of them, but it is one of those that does command a premium, but I don't think it deserves a 20% premium. At these prices, I would not touch Coca-Cola, but it is going to be one of those big premier companies for me. It's got consistent revenue. Growth is kind of slowing, but as long as it stays around like the 50-cent mark for their dividend, I'm fine, and as long as I don't cut the dividend, I'm good. To me, I think this is a good See's Candy example. See's Candy is known for giving Berkshire a crap ton of cash every single year, but they don't have a way to intelligently reinvest that money back into the business, so it pretty much just pays a lofty dividend to Berkshire each year. That's what Coca-Cola is going to be for me as well. The growth might not be great because I don't know if they have a good way to put in their cash flow back into the business at a higher rate than they can pay out. So I think as of right now, it's a mature company. I think they're doing the right thing by rewarding shareholders with buybacks and dividends. But I do also know that they've been running, the company has been run very well for a very long time. So I'm not worried about it. Overall, it does its job very well. And even if the dividend growth isn't super isn't super aggressive, isn't like double digits or anything like that, I just want to own Coca-Cola for the brand, for what it sells each year, and for the stellar management. And I want to own it because I drink Coca-Cola or a Coca-Cola product every single day. So for me, this is one of those heartfelt ownership ones that I want to own because I love the company. Then we got Apple at $226.94, 6 shares, $1,300 worth of market value, soon to be like $1,500 once I get that dividend from Altria. $210.88 is our average cost. 2.31% of the portfolio is in Apple. Wish that said 23%. It will eventually. Up about $5 today. Total up about $100 with a 7.5% return. So guys, I love Apple stock. It will be the single biggest position. I'm going to keep saying it every video, trying to manifest that. But I'll put more cash into it before the end of the month of October. So I'm excited to build this position up, guys. This is my favorite company outside of Coca-Cola and Visa. So this will be the biggest position. I think over the long term, the services segment is going to do very well, and that's going to be the real moneymaker for Apple. Even if the new iPhone with AI doesn't sell well, I'm not worried about it long term. I think they have a very well diversified business, and overall, I'm not worried about the profitability of Apple. They have so much cash on their balance sheet, and they have opportunities to reinvest for higher returns. So overall, guys, I love Apple, and it will be the single biggest position simply because I think over the long term, it will do very well. Then we've got AbbVie at $196.30, 95 shares, $18,600 worth of market value. So this is our single biggest position as of right now. Average cost is $95.20. 31% of the portfolio is in AbbVie. Today we're down $60. Total we're still up $9,600 with a 106% return here on AbbVie. Guys, this is by far my favorite flower within the portfolio, and I'm seriously just going to keep taking the watering can to it every day and letting it grow and grow and grow into a beautiful garden. So guys, this is by far my single best investment that I've ever made in my entire career as an investor. I did a really good job analyzing AbbVie. Then when they did, because I was looking into pharmaceuticals and I wanted to buy, it was down to AbbVie, Pfizer, Eli Lilly would have been really good too, but I looked into a handful of them and I felt like I understood AbbVie's business the most. I liked their pipeline, and once they announced the acquisition, they tanked. And I'm like, I don't feel like they've lost any profitability with this merger. Yeah, they're going to take on some debt and lose some cash, but that's not going to affect their pipeline or their year-over-year revenue, because they still have the drugs that they still own the drugs. They haven't spun off anything, and they're getting more with this Allergen acquisition. So if anything, the combined company might have to spin out some things, but I don't think they're going to spin out the big money makers for each company, which were Botox at the time and Humira for AbbVie. So overall, I just felt like the combined company was going to be stronger, even if they had to you know, spin off anything for like a DOJ, or, you know, worry about monopolistic tendencies, anything like that. I still felt like the company together would be better overall. And I was right. Overall, the profitability has gone up. They've done a very good job of kind of keeping that profitability up, even though they lost Humira. And I have a lot of confidence in AbbVie that over the long term it will do well. The only reason I would sell a company is if they did a massive dividend cut or something changed with the economics of the business. So as of right now, AbbVie is just going to be that flower that I keep watering. And those dividends are going to go towards T. Rowe Price and Visa for now. Then we've got Visa sitting at $276.35. We only got one share, so the market value, of course, is going to be exactly what it says on the price. Average cost is right around 170 bucks, so up a little bit here. 0.5% of the portfolio is in Visa. Today we're down $1.27. Total we're up $8 with 3% return. So this is definitely one of those that I'll be pouring money into once I have it. I'm paying off debt as of right now, and I'm doing a pretty good job about that. But once my debt is paid off, I'm going to be pouring money into the stock market, probably $200 to $300 a month, if not more. With dividends, it'll be close to $500 a month, which I'm super excited about. So Visa is going to be one of those that I just buy hand over fist, especially with the current lawsuit. I'm excited to see where it falls, and if it does fall below that average cost, I am going to be buying it as much as I can. Then T. Rowe Price is at $107.77. We have 101 shares, $10,800 worth of market value. Average cost is right around $110 per share. Around 18.5%, 19% of the portfolio is in T. Rowe Price. Today we're up 66 bucks. Total we're down $191 with a 1.7% loss. Guys, I've been down way further on T. Rowe Price. I've been up a little bit on T. Rowe Price. This is one of those that I want to hold for the long term. They do a very good job of capital allocation within the business. They have a high margin business, very good at capital allocation and reinvesting back into their business for very good return on equity or return on investment on invested capital. So I want to own this for the long term. It's not a sexy stock. It's not an Apple. It's not a Tesla. It's not an Nvidia. But it's one of those that I feel like gets overlooked and really does return good returns, return good capital, and has good return on investment over the long term. So overall, guys, I feel like this is one of those sleeping giants that right now it might be low because interest rates went up, people pulled out of the market, in turn pulled out of T. Rowe Price's funds as well, and they put a lot of money into T-bills. Warren Buffett even did that. He sold off like half of his Apple stake, which I think was a mistake, and put it into T-bills. But this is one of those that once interest rates go back down, which I know I believe the DOJ or the Jerome Powell was saying that, the chair was saying that rates were going to go down again. So when that happens, I feel like people are going to pour money into the stock market overall, which in turn is going to pour more money into T. Rowe Price, and then we'll see that stock appreciate. And if not, I'm happy with the 125 bucks it pays me every single month. They have a low payout ratio, so they have a long-term, they have a very long runway for this dividend growth to keep happening year over year. And I think it will, given enough time. So, and the 52-week high is not super up. It's like 122, but it's been as high as 200 bucks. So, for me, I'm not really focused on that appreciation, but I would make 50% on my money at that point, and it would be a $20,000 position. So, if it does go back up to those levels, I get a really good return, and I put that money back into itself or back into Visa. And if it doesn't, I get paid 125 bucks while I wait for it to go to 200. So this is a great dividend aristocrat, great management team. I understand the business really well, and they do have a great return on invested capital for investors, as well as a growing dividend and share buybacks. So overall, this is just one of those that I plan on holding for the long term. And again, the only reason I'd sell out is if I saw a big change in the economics of the business. If, like, say if they lost 50% of assets under management in like a month or something, then I might switch out. But overall, I want to own T. Rowe Price for the long term. And then, of course, guys, Berkshire Hathaway, I talk about it every video, but I want to buy it around that around that $400. We're down 222 today, sorry. But I want to buy it around that $400 mark. So I want this for See's Candy. I want it for for me, mostly it's See's Candy and Geico, and then they have other businesses that I like as well. They own, like, I think it's like 70 other businesses, but I really want to own See's Candy and Geico, so those are the two that I'm really focused on. But of course, they have the marketable securities, and it's truly the big competitive advantage for Berkshire is their float. It's how well they do their underwriting and how they are able to reinvest the normally free float into businesses, and as well as buying marketable securities at good prices and buying wholly owned businesses with that float and with those with that combined overall revenue from each individual business, the dividends that they get from stocks, as well as the float that they generate from insurance. So overall, guys, I want it for the overall business. I understand the dynamics of the business very well. They have a very like hands-off approach, and I do like that a lot. When something does go wrong at one of their subsidiaries, they are very, very quick about addressing it and fixing the issue. I do like both of the people that are replacing Buffett and Munger, being Greg Abel and Ajit Jain. Greg has run everything outside of insurance for a handful of years already, and he's been doing a phenomenal job, as well as Ajit is the reason that they have so much float, and how they are so profitable in the insurance business as a whole. He has done an effective job at running their insurance businesses and has really turned it into a juggernaut of reliable float. And then Buffett, Munger, Ted and Todd Combs as well use that to redeploy it into the market at a good rate of return. So overall, guys, I feel like even after Buffett and Munger, I do feel like the stock will go down, obviously, when Buffett goes. But I think he has good lieutenants in those chairs, and I think they have a very wide expertise on how to run businesses, how to analyze businesses, and how to take advantage of capital allocation in a healthy way that will return great overall results to shareholders. Even without Buffett and Munger at the helm, I think he's chosen really good people to be in those positions to take advantage and still reward shareholders. So with that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel. That Dividend guy, hit a like on the video so I know people appreciate me posting again every single day. I'm excited to be doing that. So thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend guy, and I will see you guys tomorrow with another Robinhood portfolio update. Take care, guys.